Hello and welcome to another MCO market update on ADA. Here on the ADA chart, we might be working on this C wave to the upside now. I already mentioned that in yesterday's update that we might have started that C wave to the upside. It is not impulsive, but we start to see a series of lower highs and no, not lower highs, higher lows and higher highs. So it's entirely possible wave B bottomed here on the 16th of April. On Wednesday, and yeah, I'm now tracking wave C to the upside here. I'm still showing the potential of one more low here, but as I outlined already in the updates in our membership area, it starts to look a bit strange. It's a little bit too high for a fourth wave, and the move down obviously already reached the support zone. Technically speaking, I could call it a completed move down. Yeah. For now, the move up is also in 3 waves, but it could be that we're working here on a diagonal pattern, which eventually will turn into 5 waves. And we completed wave 1 and 2, and then this would be an AB with a C wave to come of wave 3. So basically 1, 2, wave 3 is in the making, then a wave 4, then a wave 5. That's what would be ideal. I already mentioned about the potential target for this move up. I mentioned that already a few days ago when the price struck that low here, the potential B wave low. We already, you might remember that we already put those targets here on the chart. We start to see a little bit of upside momentum. I mean, it's far from convincing, but we're getting there potentially, right? And if we're tracking this move to the upside as a C wave, then as I said, it would be a 5-wave pattern, and we completed waves 1 and 2, yeah, and we could be in the 3rd wave. Now, this would be an ABC structure, and then there could still be another 4-5, but I'm not sure if we get all the way up there with the structure we have here. For example, wave C could be extended. That's, I think, what that suggests, because otherwise, there's no way we can get up there. And the target for that C wave is around 77.9 cents. That's the 100% Fibonacci extension. And that's not only that. I mean, that's an ideal target for a C wave, right? So again, we could get one more low even here in the bullish count. But yeah, again, it's starting to look like the low is in. But that's not only, you know, a Fibonacci target up there. Obviously, these Fibonacci levels are central to our, let's say, method, to the model. And they represent the underlying order that we find in markets. But it's also good to watch for additional clues, additional levels. And another level that is quite striking there. I mean, it's not a different level, but it's the same price level around 77.9, 78 cents. It's just the previous swing high, a significant swing high from end of March here. Yeah. So as you can see, when the price, you could say crashed down in March, early March, tried to recover, but couldn't get above that 78 cent level several times. And as you can see, this is not only structural resistance, it's also Fibonacci resistance. So I'm watching if the market can get up there. What I will do, I will remove the red resistance zone. It served its purpose here. We don't need it anymore because ideally now, if that B wave bottomed already on Wednesday, then we're watching now for the C wave to develop. Now, that being said, the idea that wave B bottomed in blue is only valid as long as the market holds below the wave 2 low at 61 cents. So this would be further confirmed, obviously, you know, that we go higher with a break above the last high at 63.4 cents. So as I said, I'm leaning towards it. Need to see a little bit of action, a little bit more action, but you know, we could focus on higher prices against that 61.1 cent level, that last swing low. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.